And recently we've noticed here in our events and panels that there's been a huge jumping of the chasm by people that would not have been interested in the crypto blockchain world before. That started probably the last quarter of last year. And I wondered what you think about that, that all of a sudden, I'm glad and happy about it, but all of a sudden, ordinary people that are not interested, even my building manager, my apartment building manager said to me the other day, "Oh, you're into crypto?" And I'm like, So I'm amazed that this happened so quickly, and I've been sort of following it and supporting these currencies since, you know, the inception really in 2008 and 2009. So I'm wondering, why would this happen?
Yes. Well, I think that there's multiple components of that question too. Everyone is an investor. However poor you are, there are assets held somewhere in your name, whether it be by the government, social security assets, whether it be by your company, pension assets, whether it be in self-managed accounts, big or small, that you may have in your name, or you may have your own, you know, small investments or large investments. But all of us are investors in some respect, even if we're not the decision makers. You know, again, 30 years ago, we began a move towards self-management and away from defined benefits to defined contributions, and that led to more and more people beginning to manage their own money. The problem is we limit their choices. So we give them fixed income, we give them public market securities, and not much else. And the reality is those are low returning asset classes. So I think it's understandable that when most people look at the people that are free to invest in anything, and they see the enormous returns that come from being early stage tech investors, private equity investors, real estate investors, I think that there is a feeling that the mass of the people are being left out. And so the promise of crowdfunding, the promise of distributed asset classes and categories, ICOs and cryptocurrencies and assets, is the democratization of investing and the opportunity that represents for everyone to manage how they choose to invest and spend their money. With that, however, comes a responsibility, which is if you take it on yourself to make your own investment decisions and you lose, you are therefore supposedly responsible for the outcomes that you might have generated for yourself and your family. And at that point, government steps in, and most governments say, we want to protect the people from themselves. And so, as well as from other people. And so in the 1920s, following the great crash in America in particular, but around the world, a bunch of regulation was brought in. Accredited investor, general solicitation, unitary banking, Glass-Steagall, all of these things were intended to protect the masses from the sharks, the bad actors and the bad practices, but also to protect people who couldn't really afford to lose everything they have from themselves. We're in the middle of a dialogue in America and in society about the fact that we took away those regulations, we've taken Pandora out of the box, we're allowing people to invest in the ways that you're describing, and the potential negative consequences of that, as well as the positive consequences, have yet to be seen. And we're beginning to see very young people become very wealthy overnight. That's a positive consequence. But without question, we're going to see vast numbers of people lose everything that they have and everything that they spend in the space. Why? Because the failure rate in software-based businesses is very high. And cryptocurrencies and crypto assets are software. So the failure rate of software-based startups, we're going to see that in the crypto asset environment. There's already thousands, soon there'll be 10,000s, and maybe one day hundreds of thousands of crypto assets, and the number that will win will be very small. And that means total loss of your capital in all of the cases where you bet on the wrong coin or the wrong token or the wrong asset.